Hello friends, welcome to Money Sprint. This is Hani Sawa, Chartered Accountant. Today we'll be going to discuss the income tax implications of F&O transactions in India. So first, some of the basics. So F&O transactions are taxable as business income. So any profits or gains or losses generated from F&O transactions will be taxable as business income. F&O transactions are not speculative transactions as per Section 43(5) of the Income Tax Act. Since this is business income, it will be taxable at the rate of 30%, which is also subject to the applicable slab rates, surcharge and cess for individual and HUF or the partnership firm, as the case may be. Applicable tax forms are ITR 3 for individual and HUF and ITR 5 for firms if they are not eligible for Section 44 AD. And the form is ITR 4 for individual HUF and firms if they are eligible for Section 44 AD. So F&O traders are also liable to pay advance tax in 4 installments during the year. So the first installment is in June, followed by September, then in December, and in March. And the percentage of tax to be paid in these installments is also prescribed. Now let us look at the tax audit requirements under Section 44 AB, which could be relevant for F&O transactions. So the tax audit under Section 44 AB is applicable if the turnover of a business is more than rupees 1 crores. And this limit of 1 crores turnover is enhanced to rupees 10 crores from financial year 2021 if the cash receipts of the business are less than 5% of the total sales or turnover, and the total cash payments are less than 5% of the total expenses of the business. So F&O transactions, since they are all digital, in my view, they should be eligible for this enhanced limit of rupees 10 crores turnover. Important to note that this limit is not applicable for taxpayers who are eligible for Section 44 AD and who have a turnover of less than 2 crores. Such taxpayers are not subject to tax audit under Section 44 AB. Let's also understand what is the meaning of total turnover for F&O transactions. So in a nutshell, it's the total of all realized profits and losses where the negative of the losses is ignored and added to the realized profits, and all the premiums received from positional option selling. Now let us evaluate whether F&O transactions can be eligible for Section 44 AD presumptive taxation. First, an overview. So under Section 44 AD, it is assumed that 8 to 6% of the total turnover is the taxable business income for that year, or it can be even a higher sum as declared by the taxpayer. So it is not an option or an eligibility. If the income is more than 8% or 6% of the turnover, then the taxpayer has to declare that higher sum as taxable income. What are the conditions to avail Section 44 AD? So the taxpayer should be an eligible taxpayer. He should be an individual HUF or a partnership firm and not a limited liability partnership or a company. He should be carrying on eligible business, which can be any business, except it should not be a profession. It should not be from commission income, agency business, or in the business of goods and carriages. So this implies that there is no explicit restriction for F&O business under this section. The third condition is that the turnover of the business should be less than 2 crores. And under this section, there is no requirement of maintaining books of accounts and also doing tax audit, but this is subject to certain exceptions. For example, if there is a loss in the business eligible for Section 44 AD, or if the taxpayer wants to offer less income than 8 to 6% of the total turnover in a year. Now coming to F&O transactions, it is a debatable topic whether Section 44 AD is applicable to F&O transactions or not. So the arguments which support the applicability is that number one, there is no explicit restriction for F&O business in the section, and number two, there is an option for the taxpayer to declare higher taxable income. And what are the arguments for non-applicability? Number one, it may be seen as going against the intent of the provision, which was to provide relaxation from compliance to small taxpayers. And number two, all the FNO transaction data is really readily available with the broker. So there is no question of hiding any transaction or a compliance burden which is imposed on the taxpayer. So as we can see, there are arguments for and against applicability of Section 44 AD to FNO transactions. In my personal view, Section 44 AD should not apply to FNO transactions because all the transactions are readily available with the broker, and the profits and losses can be clearly calculated from the data. But this can be subject to interpretation, and the tax authorities could take a different view. So do let me know, what do you think about this provision? Is it applicable to FNO transactions in your view? Friends, I hope you like this video, and if you do, then please do like, share, and subscribe the channel. Many of my friends have shared that they are not happy with the services of their present broker, and they are also not happy with the fact that their broker is not allowing them to buy far OTM options, which are required to reduce the margin. So I have recently started trading with First Stock, which is a Bangalore-based broker. Until now, I am pretty satisfied with their service, and their customer care is also very approachable and helpful. So if you would like to test their services, do try to open an account with them. I will provide a link in the description. So see you in the next video. Thank you.